I buy first lien mortgages.
Do you think that the elections are going to affect the performance or this entire industry of note buying?
Industry, Trump had said he was going to dismantle that. So over those 4 years, that law is very much still standing today. So it takes time, and there's always a very slow moving animal trying to
If
get.
somebody were to remember one thing about what you do as a notes investor or what you do in general, what should that person take away and remember about you, Nathan? All right. Hi, everybody. This is Nathan Myers from the Raise.com Top Capital Raiser Show. And today I'm with Nathan Turner. And here we're going to tease out some of the best performing habits, strategies, techniques, tactics of some of the top capital raisers, fund managers, and everything. So Nathan is a professional. I mean, he's been deep in the trenches when it comes to managing real estate, property management. He currently manages a fund where we're going to focus on explaining notes and how he has a fund that allows people to get access to these types of investment opportunities. We're going to learn about what he does with his events and what he's currently doing with his notes investment business. Nathan, it's great to meet you.
Pleasure. Thank you very much.
No worries, and I've been pretty excited to get into this one. Good contact Patrick introduced us, and I was really happy he introduced us, and we got to learn a bit more about what you do. So perhaps maybe I think we should take the opportunity for you to just take the lead and introduce yourself to the audience and how you became a notes investor.
Okay, great. So it's a funny thing, and we're saying off camera. So I grew up in Lethbridge, Alberta. So I'm a Canadian boy, and everything I do now is in the US, but obviously didn't start out that way. So I ran a couple of different businesses in Canada for a little while, and approached by a colleague who was originally from Calgary, had moved down to California. And previous to this, I had done some fix and flip out in Saskatoon and really enjoyed doing that, 2005, 2006, and had just a blast doing that. It was really fun. As the market started to turn, I got stuck with one property. So I ended up being a landlord for a little bit. And I quickly realized I don't like being a landlord. I liked the cash flow. I liked that piece of it, but that was about it. I didn't really like anything else involved with being a landlord, taking care of the property, dealing with tenants, dealing with the property manager. I was questioning why people do that kind of investing at all. So fast forward a little bit, my friend had moved down to from Calgary down to California. He had networked into a group of investors where they had purchased a portfolio of properties, mostly centered in the Midwest United States, in April of 2007. So if you go back in time, that was like right at the peak of the market. The idea was they had bought this portfolio. They were supposed to just flip it out to another investor. That deal fell through. And so then he came to me by fall of 2008. And that's right, again, if you go back in history, that's right when things were just getting all kinds of crazy. And our charge was, we had these properties, we had power of attorney to do whatever we wanted with them with no operating budget. So we're like, okay. And they would run down, poor quality houses. So we're like, okay, interesting. What are we going to do with this? What we came up with was selling these houses on terms. So essentially, we didn't know it at the time, but we were creating notes. And so I didn't even know that's what they were called. We were selling houses on contract. That's what we called it back then. And I was doing just some internet research. I figured there's got to be a way to profit from these contracts that we put together. You can sell a turnkey rental property. So this is kind of the same thing, very similar kind of a model. But the difference was the person living in the house is actually the one taking care of the property. So we're like, okay, so there's got to be a way to sell these. Kind of fell into a guy that was teaching very much what I was doing down in Houston. So I went and took his class. And that was my first real introduction into this already existing world. And then it was later that fall, 2009, where I went to a conference all about note investing. And I was blown away with everybody who was there talking about basically what I was doing, but much, much better and a much grander scale. So I was fascinated to see that this kind of thing already exists. And it just kind of went from there. I started speaking at different conferences in 2015 and put together a fund just last year. So I'm going out and buying more of these mortgages, these notes all over the US. And the other thing I did last year was I took over one of the conferences, one of the ones that I had spoken at for several years. I was approached by the organizers, the operators of that conference, and they didn't want to do it anymore for different reasons, but they just asked if I was interested in taking it over. Absolutely. So that's kind of been the progression over the last 15 or so years, but it's just been a ton of fun. I really, really enjoy the business. For me, it's all of the perks that I liked about being a landlord, meaning the cash flow, without any of the headaches that go along with it. I don't own the property. The person living in the house, they own the property. I'm just collecting payments. They take care of the house. To me, that's a win-win.
Yeah, no, it's really interesting. It's such like a nice business model, and when we first spoke, like I remember there was someone who approached, I guess, our side, raises.com, and then they did something similar where they would say that the benefit is you're just dealing with the money without dealing with the actual atoms. You're just dealing with paper and laws and money, as opposed to dealing with like plungers and all those headaches, ladders, plungers, and nails. So maybe for the Canadians, for the people in the US, what are some specific things that people have to recognize when they get into note investing, or misconceptions? Because I think a lot of people, especially in this market, would benefit from learning about it.
Yeah, the very first thing, and I say this to everybody, is I came from kind of a real estate background and started doing notes. And one of the first things that I had to get my head around is it's not real estate. We're not buying real estate. We're buying paper attached to real estate. But it's a finance game. It's not a property game. The property just happens to be the collateral. So do I end up with the property? Yeah, I do. And am I still dealing with property? Yes, I am. But what I'm buying and what I'm selling, if I can help it, is just the paper. So that's the first thing to kind of get your head around. So I'm the bank. I'm not a homeowner. And just if you can kind of put yourself in that role and start thinking about, well, what would a bank do in this situation? And like, how would a bank do this? Like, that's you. So that's kind of the first big hurdle to get over, is just realizing that that's what it is. It's paper attached to real estate. It's adjacent to the real estate. It's related to the real estate, but it's not real estate.
Makes a lot of sense. So one other thing, because I heard that somebody else in this business, they would go to a bank, and I think we even discussed this, like they would go to a bank, or usually a bank in the US, where there are a lot of people, I guess, non-performing notes. Some people do, the different angles of this game. Like some people would probably look at a loan that's non-performing or a distressed auction and things like that, and look at like a list of all these different loans, and then maybe you would buy them and take over them. Some of them are performing well, and maybe you would still buy them. So what type of notes do you buy?
So I buy first lien mortgages or deeds of trust, depending on the state, or it can be called a different kind of contract, as a contract for deed. Depending on the state, they have different names for that. They'll call it a land contract, or a bond for deed, or an agreement for deed. We kind of lump all those together as a contract for deed. But that's the kind of security instrument that I'm buying. And then I have bought for years. I did just non-performing, where I was buying just the ones where people are not making payments. And then my job is then to go in and figure out, now what? If the person's still there, can we get them to start making payments again? If it's vacant, how do we acquire the property as quickly as we can so that we can turn it over? And just kind of dealing with all of that. It's actually a lot more work than the performing notes for all kinds of obvious reasons. In the fund, we're actually just concentrating more on performing notes, where people are making regular payments, and it's just far more easy to manage, far more predictable.
Okay. And so I'm guessing that the fund is to get assistance in buying bigger notes, or probably more notes. So I guess maybe we can walk through what the use of funds in the fund is it just like maybe there's like a giant note and then you just need some help to buy them in a group, or how does that work?
Yeah, so one of the big reasons for me for putting the fund together is just it's much easier for me to manage on my side, and then it's far more secure for the investor as well. So for me, I'm just dealing with one pool of money. So then I'll take that out and I'll go and buy, a note here, a note there, or if I can buy a pool, if I can buy, 10 or 20 at a time, fantastic. Depends a lot on what capital I've got available, and then just what deals I can find. So then the other half of that, of course, is finding those deals. So currently I'm buying a lot of, they call it seller financed paper.
Yeah.
So somebody owns a house, they've sold it on terms, they created a note, and then now they're looking for a lump sum of cash rather than taking payments over time. So that's where I step in and provide that lump sum.
That's brilliant. So, okay. And I think that now in the market, it's probably a really nice time to do this because one of the CFAs, on the raises.com side, we're saying, hey, like, because like the interest rate, this is more a few months ago of end of 2023. It's like when the interest rates go up, the value of the bonds or value of loans would probably go down, which may mean that buying the mortgage notes could be a good time now because you can get them at a discount because the interest rates are up. So are there any specific advantages of people wanting to work with you now because of the way things are looking?
Yes. Now, again, one of the cool things about notes, and I can say that probably with every response I'm going to say, is one of the cool things about notes is when I'm buying a note. So, for example, if you're versus say a apartment syndication, something like that, or a multifamily build or something like that, you're talking about a projected income sometime in the future. When I'm buying a note, it's already established. So if the person making the payments, if their interest rate is 8% or 10% or 6%, whatever it is, that's already established. And then I'm buying that at a discount to achieve my projected yield, what I would like to make on that note. And often it comes down to, will the seller accept my offer or not? And that's it. Are they willing to accept what I'm willing to pay in order to get my yield target? Yes or no. And then if the deal makes sense, then it makes sense. And if it doesn't, it doesn't. But the cool thing is it's an already set contract. They've already agreed to make that payment at that interest rate over the next 30 years. And fun fact, in the US, so in Canada, our mortgages always have a term where it's amortized over 30 years, but we've got a 2 or a 5 or a 10-year term where we're having to go back and renegotiate at that time. In the US, the amortization period is the term. So if you lock in at 5%, you're locked in for 5% for the next 30 years. People can, and they do, they can elect to go back to the bank and renegotiate if rates are better, but that's a bit of a different twist on it, and that's actually it helps make it more possible for note investors to go in and do that. There's not that constant turn.
That's amazing. And I mean, I can see why, there are a lot of, I mean, there's so many opportunities down there for people who want to get into that business. So are you looking for, I guess for your fund, are you looking for anybody in North America or anyone in the US, or is there a particular state that you're looking to work with people in? I'm just curious on who's a good fit for people, in your new fund.
As investors?
Yeah.
Yeah, for investors, it's actually open to anybody in the world. If you're outside of the US, there's an extra set of documents you're going to have to fill out, but it's really not that complicated. But at the same time, everything's done in US dollars. Because of that, most of my investors tend to be in the US. It's a US-based fund. It's a 506C Regulation D fund, meaning it's open to accredited investors, and that's people that make at least $200,000 a year or have a net worth of $1 million outside of their primary residence. So that's kind of the qualification, but that can be somebody from Canada, Mexico, Europe.
Fantastic, because Regulation D, the last guest, Devin Thorpe, was saying how Regulation D is one of the most, if not the most common used exemption for capital raising in the world. And literally $1 trillion per month goes through that regulation. So it's definitely something that is well known, and it's pretty it's almost like a big standard, right? So that makes a lot of sense. So looking at where we are and note investing, one thing I want to take a dig at and look more on is more the so then this whole the issue of defaults. So what happens if, like, is there like an issue or risk of defaults? Can people, because this is first lien, so it's supposed to be pretty robust, but maybe we can walk through like the risk of default, how it looks like, and how do we avoid things if things go back to that 2008 crisis, because now we have SVB Bank and all these things happening. So.
Yeah. So bottom line, if there's a default, then the property is the collateral. So the house behind the loan is the collateral. So part of my job then, as I'm purchasing, is to make sure that there's enough equity to cover any what ifs. If, there's a downturn in the market, or the house, suffers some kind of damage, either from the person living there or whatever, act of God or something like that. But in that case, it's insured, and there's protections we put in place over and over and over again to make sure that we're well protected. Let's go into some of those risks though, because like you say, I'm in first lien position, and that you can buy second and thirds, but I'm a first guy. That's just kind of my niche. That's what I like. Some of the things that you need to be careful of that kind of trump the first lien position would be something like property taxes. So property taxes, they get first dibs. So that's something you need to just kind of keep an eye on and make sure that is being paid. And that's a very easy thing to check. And in fact, almost all loans, it's unusual if it's not a loan where whoever's making those payments is making their principal and interest payment for the house. And at the same time, they're also making a payment for taxes and insurance. So it's regulated as they make their payments. So if they're making, say it's a $1,000 payment, 800 that might be their actual mortgage payment, and then the other 200 goes into escrow. It's set aside to pay for taxes and insurance that are really the borrower's responsibility. So, but that is one thing just to kind of be aware of. Certain states all states have slightly different rules, but say for example, it's a condo, maybe it's a loan on a condo. About half the states, roughly 25 out of 50, have what they call super lien state, meaning an HOA lien can actually come before a first lien mortgage. So like a state like, well, I don't know what you call it exactly, a state like Washington, D.C., that's the case, where if there's an outstanding condo lien, that actually trumps that first lien mortgage. And then others, it's not a super lien, so that is subordinate to that first. So just things you need to be aware of, rules that are a little bit different here and there. That makes it a little interesting.
Yeah, Washington D.C. like is shaped like it's a bit of a weird, I guess a district, but it's kind of shaped like a weird. It's shaped like a square. Like, a lot of rules go down differently there. It's really. Do you think that the elections are going to affect the performance or the not just of the fund, but of this entire industry of note buying?
It's an election year every 4 years is a little bit of a wild card. It's really hard to say. So much of the economy is then swayed by promises made by potential leader of the new government. And so it's really interesting to see what kind of promises are being made, especially those last couple of months right up before the election, and just to see how that starts to move the needle. And you can kind of track it. So it's a little bit of a wild card situation. Overall, what I've seen over the last 15 years and what I've kind of learned from other people that have been in this business even longer than me, generally speaking, change is pretty slow. There's not a lot that happens I'll give you an example. So when Trump was first put into office, whatever year that was there a few years back, there's a set of laws in the United States around lending called Dodd-Frank. So it was put into place in 2000. It started to be put in place in around 2009 and actually became law in 2012 or 13. where there was a responsibility of lenders to make sure that borrowers had the ability to repay. That's in its very simplest form. That was the intent. They kind of went a little bit overboard, in my opinion, on some of those rules. Things like seller finance, you can't do more than 3 in a year and things like that, which didn't really make a whole lot of sense. I'm sure it made sense when they were making the laws, but in practice, it doesn't really make a lot of sense. So because that had been a big complaint in the housing industry, especially in the private lending industry, Trump had said he was going to dismantle that. So over those 4 years, as much as that promise was made and small incremental things were happening, that law is very much still standing today. So it takes time, and there's always a very slow moving animal trying to get major things put into place. Like I say, like even establishing Dodd-Frank, they started talking about it in 2008. It didn't go into practice until 2012 or 13. So it's very slow moving. So it becomes easier to kind of look down the road and say, okay, if and when this does happen, then we can change our business this way or that way.
Yeah, and it's kind of interesting from your perspective, because one of the guests that came on, he was saying how things were more about landlord friendliness and things changing in that way. So I find it interesting that in this way, now it's like, the seller finance side of things can get slowed down. So, okay, so if somebody wants to, we probably know the types of people that will be a good fit in investors, but if somebody wants to be like you, and then they want to be, maybe, who knows, maybe in the future they want to work with you on a GP basis, or they want to do their own fund and notes investing. Right. I guess, what are some of the main things that you learn? I guess, what kind of like consults or teachings or advice could you give to somebody who wants to start a fund like you in a note buying?
Yeah, for sure. So I would say, very first of all, make sure that you know what you're doing. Get some education, and that's not a pitch. I don't teach, but I can put you in touch with people that do teach this business. But make sure you learn it, because, like I say, it's not real estate. Just because you've done 100, rental properties or 1,000, it doesn't matter. This is not that. This is a different set of rules, different set of instructions on how to get things done. So make sure you learn the business. After that, it's just about getting out there, actually doing deals, networking with people. It's a pretty small community, especially on our level, where we're kind of the secondary, maybe the tertiary market. There's like the big boys where they're doing, $100 million trades. And then there's us smaller folks that are doing, $1 million at a time kind of thing. So we're that smaller crowd. But in that smaller crowd, we pretty much all know each other, and it's a very friendly competition kind of an environment, where we get together and have a great time together and talk about, oh, you won that one, and oh, good for you, and you outbid me on that, oh, you're crazy, whatever, and kind of just banter back and forth. It's really a great kind of community, but it is small, so get into it, and it's not exclusive. But you do need to know players in the field. So get in there, start to meet people, start to establishing yourself as a doer.
I like it. Why is it? Do you think it's small? Because it makes so much sense as a business model. It seems like the regulations would be a bit more lax. So I'm curious why it's much smaller than other industries or other niches.
I think mostly it's just unknown. Okay. People just don't really know very much about it. And people, generally speaking, when you're talking about real estate investing, people think about rentals or fix and flip or something like that. And that's just kind of where their minds go. And that's about as far as it goes. And then you start learning about notes and like, oh my goodness, that's a whole different approach to the same kind of investment strategy, similar. So then people start learning about that, and then you start get going. And then it's just, regular turnover. People, maybe they get old, or maybe they just get disinterested because they've got this other shiny object that looks really cool, and they want to go chase that.
Yeah, and I guess we did have the biggest interest rate hike in 27 years or something too. So that may be a factor too. Now we're done the ZIRP era, the 0% interest rate eras, right? So it's like maybe that could be a factor. I'm not sure, but
maybe, yeah.
Cool. Cool. So like looking at this industry and networking, pretty important. So you have this event that you run. Curious,
Yeah.
I'm super curious how you came to, because you gave a bit about your intro at the beginning, but I'm curious about how like you came to take over that event. You came to, have this
Yeah.
event where, and when are the events, and how could we get people maybe even signed up for those events?
Sure. Yeah. So I'll tell you that first, and we'll go back for the history. So my event is called Diversified Mortgage Expo.
Yeah.
And you just search it on the internet, you'll find it, diversifiedmortgageexpo.com. It's got all the information there. It's coming up May 31st, June 1st, down in Nashville, it's just a ton of fun. Like I say, we get together and just have a great time together and learn at the same time and meet new people and all that kind of thing. So going back again, 2009 was my very first note conference I went to. And it blew my mind. These people that are talking about this just amazing business that I've just come to love. So I started attending. There were 3 or maybe 4 conferences that were kind of regular at the time. So I would go to all of them, and I was meeting new people. I was, learning from some people that were teaching the business and trying to figure out how I wanted to approach it, because there are different ways that you can approach it if you want. And so that was kind of for a few years there, just going through and meeting people and finding people that were selling notes that I could buy, that kind of thing. Um, I became known as the Canadian note guy, because there's very few other Canadians doing this, very few. One other guy in Toronto that I know of, and that's pretty much it. But I don't know, yeah, kind of established myself that way. And it was right around 2014, 15, where I thought, you know what? And I've gone to a number of these conferences. I bet you I know enough now to talk about something that I know. So I started doing a presentation just about due diligence and about like how I evaluate a note when I'm looking at one. And these was all non-performing at the time. And so looking at that and put together my, half hour, 45-minute presentation and started doing that. And I was amazed at how much more, credibility that gave me, how much more notoriety that gave me, and just that helped boost my business in a big, big way. So then I was speaking at conferences for a number of years there, starting, like I say, 2014, 15, and then just these different conferences and whenever and wherever I could, and just talk about notes and what I've been doing and how I've been approaching it, all that kind of thing. And then that would help bring in investors or people that are selling notes, both things that I needed to boost my business. And then it was just a little over a year ago, maybe a year and a half ago, I guess, people that were running this Diversified Mortgage Expo. Last year was the 8th annual, so they'd been running it for a little while, and they just decided they didn't want to do it anymore, and came to me and said, "Hey, are you interested in, you know, picking this up and running with it?" And I said, "Are you kidding me?" So I figure the only thing better than speaking at a conference is hosting a conference, as far as, getting myself out there. And I enjoy that kind of thing. I've been a part of putting together big events before, so that wasn't, something new to me. So yeah, my wife and I, we're the ones that run it. And this year my daughter's coming to be a runner for us to help get some things done as we're there. And it's such a blast. I love being around that environment and just, helping to facilitate those kind of conversations, those kind of relationships. It's just a ton of fun. So I really enjoy doing that, and looking forward to this year, the 9th annual.
Nice. Oh, nice. Okay. So I mean, this is not something that you started yesterday. I mean, you seem to. I guess, how many years would you say that you've been involved in notes and learning about it? Like, because I know the story, but then what's the time frame?
Yeah, so the timeline is that my first introduction there was 2008.
Yeah.
I went to that first note conference 2009.
Okay.
Speaking 2014, 15, somewhere in there. And then, yeah, so this conference, like I say, this is the 9th annual this year, but it's only the second time that I'm running it.
Yeah.
So that's kind of been that progression. And then last year, again, we also put together the fund. So did the fund and the conference both in the same year. So it was a busy year last year.
Nice. So now to segments, because a subset most of the audience, they're in the United States, and either they're looking at participating in something like this, or maybe learning how to build one their own. But we also have like a few Canadians here and there, and I myself am one of them.
Yeah.
How did you
Yeah.
become so good at networking in the, like, I guess any advice for Canadians on networking? Because I mean, you own an event, you own and host an event in
Yeah.
Nashville as a Canadian. So perhaps the Canadians, and for me, like, what are some tips and advice that maybe you can share?
Oh, Canadians are a bit of a funny bunch.
Yeah.
We tend to be more conservative. Um, so my first bit of advice is just get out there. Go to these conferences. People tend to like Canadians, I find. So go ahead and go, advertise that fact. The other thing that worked for me, like I say, I was the Canadian Note Guy. I have a website that's CanadianNoteGuy.com. Like I leaned into that because it was working for me. It helped me get recognized and kind of stick out. But I'll tell you, that very first no conference that I went to, I was so nervous. I was just so, feeling out of my element. So the goal that I had for myself for that first conference was to give away 20 business cards. That's it. That's all I wanted to do. And then, so that was it. And then the next one, I think I maybe upped it to 30 or something like that. But that initially, that was the goal. Later, the goal became, okay, I want to find 5 sellers, people that are selling notes, or I want to find one new investor or something like that. And that was kind of the next level of goal that I wanted to accomplish. And then now again, like my goals now are I just want to find buyers, or sorry, sellers, people that are selling these notes because I want to buy them. And I'm looking for investors to help me do that. I love my job. I just don't want to do more of it.
No, exactly, and like, I guess that's a bit, so like, you're building momentum, and even when you subscribe to fund and you fill it up, like, what do you think the future plans are? Like, are you looking at doing a fund two, or are you looking at maybe creating something that goes public one day? What's like the, I guess, what the long term vision here and the plan? The plan.
That's a great question. So, my wife and I really gave this a lot of thought. And it was it was during COVID when things slowed down a little bit and we had a little chance to start thinking about things like this.
Hmm.
So when I look at it today, my youngest, my son, he's 14. So I'm looking down the road 5 years from now. I figure he should be out of the house by then.
Yeah.
That's the plan. And then, and then it's just my wife and I will be empty nested for the first time in, 25, 30 years, or 25 years, I guess, more than that. But anyway, that's kind of what I'm looking for. So for myself, I'm not interested in building for the sake of building. For me, it's all about my end goal. So for me, the end goal is retirement, quote unquote, in 5 years, meaning that I'm totally self-funded. All the notes that I want to buy are my own cash. I'm not depending on investors for any additional capital that I need. Uh, would I still take on an investor at that point? I don't know, maybe. We'll see. But I won't need to at that point. So it would have to be something interesting to make it something that I want to do. But that's my thing. I'm looking for that end goal and working towards that. So we've got, between the conference and finding more of those connections, running the fund, and then we've got another side project on top of that. And all those things combined are all for that 5-year goal.
Nice. And I mean, yeah, no, I don't think it would be a stretch by any means. I think some of it depends on like the details of the personal, like how big you want your retirement to be and the details of that. But
Yeah.
yeah, but certainly. And I don't know if you're able to disclose, but like, what is the amount that you're raising for this? Raising for this?
Yeah, sure. No, I'm good to talk about that. So this is a relatively small fund. We're raising 5 million.
Okay.
Uh, we're still at the beginning stages of that, so we're actively raising money now. We pay out an 8% annual return with quarterly distributions. And then it's like a 5-year term. So by the end of the 5 years, we sell off the portfolio. My plan is to buy as much as that myself and put that into my own portfolio and pay off the investors, and then we'll be on our merry way. Fund number 2 at that point, maybe. I can't really say right now. But what I do know is my 5-year goal.
Nice.
Get towards.
Nice. And oh yeah, and I guess disclaimer for anyone watching and reading this video, yeah, this is not a solicitation or anything, a solicitation of any securities. You know, yeah, speak with your counsel. This is not a solicitation. But based on what you said, no, like I definitely think you're going to hit your vision. And you know, I don't know. I like it. I like it when there are other Canadians out there that are like,
Yeah.
you know, they actually, you know, compete in the U.S. markets. I find that hilarious, and sometimes run circles around them, not as if it's a competition, but I love it. So
It's funny, you know, I get approached every once in a while. Somebody will ask me about something about the Canadian real estate market, and
yeah,
I really don't know, you know. I know how much my house costs. I know what my mortgage rate is, but that's about it. I don't pay too much attention because all my attention's in the US. I can go on at length about certain markets in the US, but not here, just because that's not where my focus is.
fair. And what was your experience? Do you think, like, you know, even before this fund, like just in general, doing business with, you know, a lot of the U.S. coming up? How was your experience in that while being, like, I guess, residing in Canada? How did you find that whole experience in general?
Yeah, you know, before I got into real estate, I had a franchise. I actually had two franchises. It was going back a few years, but if you remember Curbs,
Yeah, curves.
so it
Yeah.
was a gym for women. So I had two of those out in Quebec. And that was an extra interesting challenge because you've got an American company trying to do business in Quebec, not really understanding Quebec and how it works out there. And it's a little bit different. You have to be prepared, and they weren't. So that was interesting.
Even Canadians have, yeah, and even Canadians have trouble dealing with Quebec. Like not even American, not even talking about Americans. So yeah.
Yeah. Yeah. Yeah. So that was interesting. I find more often than not, American companies who come up to Canada, I think that they just kind of assume that they can do the same thing that they were doing in the States. I mean, we saw it with Target, we've seen it with Krispy Kreme, we've seen it with a bunch of different businesses. It's not the same. We're very similar in a whole lot of ways, but market wise, consumer wise, I don't think we're close enough to just say, yeah, okay, this will work because it worked in the States. And so that's been interesting. But same thing with Canadians going down into the US, learn the rules because it's like I say, it's not quite the same. We're very similar in a lot of ways, but you know, at the very least, understand what the mentality is and how people you're dealing with work, and you know, go with it, whatever those rules are. When in Rome, you know,
Oh,
do no.
100%. Yeah, no, I've noticed the same thing too, and that makes a lot of sense. So, okay, so I mean, we have the picture of like, yeah, you know, the fund that you set up, you know, the goals that it has, even the returns and everything. So, in general, I guess even beyond your future plans, I guess what will if somebody were to remember one thing about what you do as a notes investor or what you do in general, what should that person take away and remember about you, Nathan?
So I buy, bottom line, I feel like I'm a big help for those people, especially if they're getting into trouble. So I've dealt with a lot of non-performing notes. And I think there was, from time to time, I'd see a news article or something like that and talking about, you know, private investors coming and buying these loans, and we'd be kind of painted as these predatory lenders or, you know, something like that, where we were the bad guys. And man, nothing could be farther from the truth. We were absolutely the good guys. We're far more flexible than a bank, and we're willing to make a deal because we're that flexible. Generally speaking, note investors don't want the house. So we're very motivated to help people, you know, solve whatever problem they're facing at this time. It's easy for me to put off payments for 3 months if I'm reasonably assured that after that, there's not going to be a problem paying. I don't want the house. I just want the monthly income. So we're very much problem solvers. And I feel like that's just kind of generally true about note investors in general, is we're just there to help solve a problem, whether that's the bank's problem of just needing to be more liquid, or whether that's the borrower's problem of, you know, needing, you know, a month off of payment because they were laid off temporarily or something like that. Or we're just there to solve problems.
I
So
love
I love that about notes. That's
I love it. Yeah, that's honestly one of the best things I heard, like just solving problems. Because, I mean, if it was about, like, I mean, there's no money to be made, or there's no people to serve, or no customers to be had if you can't solve a problem in the first place. So I love the way that you focus, bringing it back to the the fundamentals and the bare essentials of the business is just solving problems.
That's it.
So I love it. I love it, and it's a good reminder for everybody listening to this. Okay, and I guess the side question I was even wondering is like, okay, so you have this fund and you're doing a lot of these notes. That's great, but what if somebody just wants to like acquire like one note and they can't afford to do it? What would they do exactly? Like, would they raise like, a little bit of equity from to buy the down payments of that note? That's something that I used to wonder as well. So how do people go about that?
There are ways. So I'll give you an example. So let's say you identify a note that you're looking to purchase, but in order to buy the whole note, the whole remaining 28 years of payment is going to cost you $50,000. And you go, well, I don't have 50,000, I've got 20. So I guess I'm out of luck. Well, not so much. You can approach that seller and say, how about I buy a partial? And this is getting maybe slightly advanced, but you can buy a partial, meaning I will buy 3 years worth, 5 years worth, whatever, pick a number. And you say, okay, I will buy the next 3 years worth of payment. After that 3 years is complete, it goes back to the original holder of the note. Then they collect on the remaining 25 years in that case. So that's a way that you can get in for a small amount of money. The risk is actually even smaller because you're in it for such a short time. And that's just another approach to notes that you can take. It's, again, maybe a little bit more of an advanced strategy, but certainly
very interesting. That's a really good. Anyone listening to this, hopefully you're taking notes. That's a tip I haven't heard. So take it for what it's worth. I haven't really heard a tip that good. So that's awesome. And yeah, I mean, I think we can start directing people to work with you. So anybody who wants to consider investing and they want to learn more, and obviously this is not a solicitation or anything, but anyone who wants to learn more about what you do and your work, where do they go to learn more?
I am more than happy to just connect with people, and whether they want to invest into a fund or whether they're thinking that sounds really cool, I'd love to learn more and do it myself. Great. I'm more than happy to share what I've learned and have a chat with you. So you can just give me a call directly. I'll do the US number. It doesn't matter. It's both the same phone, but anyway, 312-860-3747, or you can email me, nathan@earnestinvesting.com. And that's Ernest with an A, earnestinvesting.com.
Beautiful. So, and that'll be in the show notes, in the description and everything. So yeah, so you're definitely going to get some inquiries. So, hopefully people make the most out of it. And Nathan, so any last words, tips, pieces of advice, before we shut down for the day?
I would say, be willing to think outside the box. There's so many different ways you can approach so many different kinds of businesses, and notes, again, one of the things I love about it, there's so many different approaches to it. So learn some of the basics and then figure out how you can, approach it in the way that makes sense for you, and just start thinking outside the box. There's lots of opportunity.
Nice. Think outside the box, solve problems. This has been Nathan Turner, everyone. And you know what to do. Reach out to him, and us, we're raises.com. We help people with proprietary raises. And until the next one, make sure you execute what you learned in this video. See you, everyone.
Excellent. Thank you.
Thank you, Nathan. Good chatting.